What are we trying to do as traders is identify support and resistance and essentially look for history to repeat itself. So they're the two things we're going to look at today. And as always, with the way that I like to try and do things, I like to try and keep things simple. I'm not going to overcomplicate it. If we're trying to identify support and resistance, and we're trying to look for those locations on the chart where the next something could happen, it makes sense to try and identify where the previous something has already happened. So one of the easiest ways to identify where support and resistance is a significant support and resistance, I'll put that provision in, is to identify where the last big move started. This is where the balance of power changed. This is where sellers said, well, I'm prepared to sell for lower, buyers for lower. The exchange in the transactions is basically the balance of power has shifted from, essentially price at neutral. The balance between buyers and sellers is quite neutral, and obviously it's quite dramatically shifted here. So if we mark off the locations where the balance of power is dramatically changing, it's very easy to do. Just identify where these big moves ultimately start and stop. So I'll just mark these three off for the moment. The next thing I want to do then is, again, just to try and keep it mechanical and apply a bit of a rule towards identifying the support and resistance. Take the bar at the higher the move and the bar at the lower the move on whatever time frame you're on. This is a 240-minute chart. So on any time frame this can be done. Just take that high bar, the high and the low of that bar, and then just take that zone across. And that's going to identify your zone of support and resistance. Again, take the low bar, this moves down, there's the low bar. The lowest bar of the move down is what I mean by the low bar. And then just take that high-low range of that bar. That's where support and, that is as simple as you can make support and resistance. And just for drawing those 2 points on, very interesting what we see already. Got multiple switches of resistance. Again, price going through that location of interest. Now, another thing that you might want to consider is rather than think about support and resistance as an opportunity to buy or sell, when price gets to support, you should be a buyer. When price gets to resistance, you should be a seller. Is it not more important to think of these locations as just that, a location of interest? Just because price is at resistance doesn't necessarily mean you should be a seller. What if price goes through resistance and you've not considered that as a possibility? So to try and not get yourself into one way of thinking, again, just one logic is price at support, it's going up. That is an opinion, a view, a decision, if you like. But to try and remove that opinion is to come up with scenarios. All right, well, price is at support, so the likely scenario might be that price would react to that support. But what about the other possibilities? Price could go sideways and consolidate at that location, and price could go through that location. So what we're trying to keep in mind is the three basic ways that price can unfold at the location of interest. So identify these support and resistance levels. A very simple exercise, a very simple means and method to actually identify support and resistance. And again, try not to think of them as support and resistance. Just try to think of them as like an action zone, the next level of interest. This is where the next something could happen. And again, we can do this on pretty much any time frame. So does this make sense? Again, it's a very simple concept. Identify the thrust move, identify the big move if you like. Take the high bar, the low bar, the high-low range of those bars, and just draw them across. It gives you a zone to be thinking about, well, when or if price gets back there, it could be an interesting place to be thinking about doing something. And what that something is will be relevant or relative to your individual strategy. So keep it very general and loose today. So basically, when price gets to these locations, you might want to say, well, hold on, price is at a location of interest. What's going on there that's, relative to my strategy? When I say my strategy, it could be your strategy, it could be anyone's strategy. It's literally, it's the location that we're trying to find to apply a strategy. Does this make sense? Is everyone happy with the logic behind it? It's a very simple concept.